What's up, guys? Welcome back to my YouTube channel. Welcome back to UCL Forest YouTube channel. Indeed, my YouTube channel, I do quality tutorial videos based on forex trading to try and to make forex to be easy and be simple to understood. Believe me, if you go through some of the videos I've dropped in the past, if not one or two, could be of a massive helpful guide to you. Just like today's lesson that I'll be explaining to you, a very powerful tool. I know most of you are not really paying attention to. The name of this tool is Fibonacci Retracement tool. This video deserves you to watch it to the end, because at the end of you watching this particular video, you will come to understand how to plot Fibonacci retracement tool both on uptrend and downtrend market, and the trick and the secret behind the very particular tool. Believe me, you will come to understand what is premium zone versus discount zone. You also come to understand how to set your fib, like you're going to remove some certain zones on your Fibonacci retracement tool. You equally know how to plot the feed both on an uptrend and a downtrend market. Believe me, if you don't really know how this very tool works, please, I would advise you to watch it to the end. At the end of watching the very particular video, you will know how to make use of this very particular tool. So right now, let's dive in to see what exactly we have in today's lesson. So what is Fibonacci retracement tool anyway? What is Fibonacci retracement tool? Fibonacci retracement tool is a particular tool we use to measure the length or the depth of a retracement. Yes, we use Fibonacci retracement tool to measure the length or the depth of what? Of a retracement. Now you could ask me, what do you mean by the depth or length of a retracement? Now it means whenever the market push up this way, whenever the market pushed to the upside this way, let's say the market printed a new high, the market retraced, and then the market printed a new high again. Your own is that you don't really know how far this thing will come down, where it's going to come down, where it's going to bounce before pushing to the upside. But with the help of Fibonacci retracement tool, you will come to know where this thing is going to retrace to before start pushing to the upside. Let me tell you, those strategy we are trading, SMC, ICT, all this and this, and they normally tell you order block, this. Believe me, most of those things was drafted out from Fibonacci retracement tool. Fibonacci retracement is a very powerful tool that will enable you or to tell you where so many number of traders are looking at to go in for a sell or for a buy. It will educate you more to know the difference between the premium zone and a discount zone. Now, what is the premium zone in any way in forest, or the discount zone in this very particular Fibonacci retracement tool? Now, in the fib levels, we have different numbers. We have 23% Fibonacci retracement tool. We have 23%, 23%. We have, I think, something like 33% or whatever. So you see the very particular ones I listed out, the very 23 and 33%. These are the premium zone. These are the what? These are the premium zone. The reason why I call it the premium zone is that these zones are where early buyers or early sellers are being triggered into buy. Now you are still confused, right? Let me list the discount zone and then try to explain it to you in even one of the most stabler form. Now, the discount zone works this way. The discount zones are this very particular stuff. The discount zones are 50%, 61%, 61%, and then 78%. So you see, this very particular 50%, 61%, 78%, these are the discount zone. These are the what? These are the discount zone. Now let me start with premium zone. Premium zone is where is where early buyers or early sellers is where early sellers or early buyers go in for a buy or a sell, where early sellers and early buyers go in for a buy or sell. Now let's make use of a simple example. You went into a shopping mall to get some items, or fortunately or coincidentally, you spot that they are selling a particular iPhone for the sum of, like, let me say, 1 million naira, and then you personally doesn't really have up to that amount. You don't really have up to that amount to purchase that very particular phone, and then but you are in need of that very particular phone. You don't have that amount to purchase that phone, but you really want that very particular phone. Then, because it's being sold at a higher price and you don't have up to that, maybe what you have in your account balance is somewhere around 500,000 naira. But because you don't have up to that, you wouldn't want to buy it, because there's no discount, there's nothing there. It's just like the fixed price. Now you might leave the phone, maybe like a week later you came back, and then you spot that the same phone, that same phone you saw that they were selling for over a million, that it is now being sold at the rate of 750. honestly you obviously want to buy that very particular phone because there is now a discount of 25%, like from 750 down to like from 1 million down to 750. You would want to give it a try, you want to like purchase it. But let's say you don't really have up to that 750 in your account. Most of us might go around start looking for someone to borrow money from, or most of us might even start looking for a way to get it by all means. So you see, during that time you are doing this thing, there is now an urge in you to go in, like to purchase it. You don't want to miss out, right? Then what if you end up missing out when it was when they gave you 25% discount, and later on the week you came back and you saw the same phone is now being sold for 50% discount. This is now the time that a lot of people would be rushing at it, will be rushing that very particular phone. They wouldn't want to miss out. They'll be rushing it. They'll be rushing. What if you guys heard that this very particular phone or this very particular stuff will fall back to 61% or 78% in the coming week? A lot of people might want to wait for that. And if it eventually falls to 61% or 78% discount, they give you 78% discount or 61% discount, you might not even be able to purchase it because a lot of people will queue in line to purchase that very particular watch phone. The same idea that was meant in the physical market, that a normal human being implemented whenever he sees a massive discount zone, is the same way we that are trading forex, the same way that traders always get triggered, always start looking for a buy or a sell when price tests these very particular what levels. When price tests these very particular levels, a lot of traders are really looking for a way to go in for a buy or a sell. So the people that normally sell at the very particular zone are people that are going in very early. They are going in what? They are going in very, very early. As in, so you really doesn't need to be valuing this very premium zone. You don't need to value it, and it looks the very way. Now look at how premium zone looks like. Now when you go to the chart, the market will always want to do something like this. The market will always want to do something that look like this. When the market prints a new high, it will print a new low. All of a sudden, you see the market pushing to the upside. And when the market is returning back, it might come back to 23% discount or 33% discount, attempt like he wants to buy. It will give a little retracement. A lot of buyers, a lot of sellers who doesn't really know about this Fibonacci retracement tool will start looking in for a way to go in for a buy, as in they will look for a way to go in for that very particular buy. They wouldn't want to miss out, right? So the moment that they are going in for a buy here, they are buying very, very early. They are buying what very, very early, and they are selling, or what if the market is in a downtrend, they are selling very early. The market might do something that look like this, bought a little and take them out and start heading for the discount zone or for the premium. So it normally happens. It normally happens. That is why it is very important you start looking at the 61% and the 78% or probably the 50% discount zone. So you see now. So I will now be showing you how to set your Fibonacci retracement tool. Then after doing that, I will show you how to plot your Fibonacci retracement tool. So in the next video, you should go and watch it to see how I backtested this very particular tool, how this very tool normally works, like how I backtested it in a downtrend market and also in an uptrend market. You'll see how to go in for a buy or to how to go in for a sell with this very particular work tool. So let's now concentrate on how to set the Fibonacci retracement tool for those particular levels, and I will tell you the pros and the cons, like the disadvantage of most of these zones, and one of the most key zones you should be looking out to go in for a buy or a sell. Now let's proceed. So let me remove a particular thing. So how do we find our Fibonacci retracement tool? Our Fibonacci retracement tool, as long as you're using this very particular trading view, which is like located at this left side, this left side bar, whatever it is located here. So where you have to concentrate more is to look for Gann and Fibonacci tools. If I try to hover, you will see that this one are for trend lines, and you can see it's already here already. Click on this Gann and Fibonacci tools. Click on it, and then you're going to see this is Fibonacci retracement tool. You could add it as favorite so that it will show this way. You could add it as favorite so that it will display on your screen, so you don't really have to be clicking on this every single time. So this is our Fibonacci retracement tool. Mine is already set, and I know that yours might look this way when you add it. Yours might look this very particular way. Let me show you. I know that when you bring your own, that like when you want to plot this your feed, and then you brought it out and yours is not showing this way, just right click on it. If you're on your phone, click on it just once, right click on it this way. This pop-up will come out. Concentrate more on setting. Click on the setting. Click on the setting. So when you click on the setting, do not go to coordinate, do not go to visibility, just concentrate on the style. Now I know yours might have all these levels activated. Yours might have all these levels activated. That is, I know yours might have all these levels. Let me activate all of them, and then you see how yours might look like. So I will tell you how I customize it back to my own. So you see, yours might have all these levels. When you try to plot the feed, it will look this way. Okay, so you see how you see how it looks like. You see how numerous numbers are here, right? Yours might have different particular was levels. So what I have to do now is to show you how to remove most of all those zones and concentrate more on the 50, 61, 78. Although I would even want you to concentrate more on the 61 and the 78% level, and then later on I will tell you more reasons why you should need to be looking out every time at the 78% Fibonacci retracement tool. So now let's remove all these very particular things. Sorry, let's remove all these numbers, because most of those numbers are not relevant. Like, they are not useful. They are not useful. So we're going to be removing mostly all of them. So delete. So you see. So now for you to remove it, all you have to do, right click and go to setting. Then when you go back to setting, make sure you leave it as trend line. Make sure you leave it as trend line. This trend line, like this way. Look at this. Let me keep it this way, and then uh go back to setting again. So make sure you leave it as trend line. Trend line means that you really want these very particular tools to have this very kind of line, this middle line, this dotted line, because this dotted line is like measuring the length of that retracement. Then leave the levels as what, as a tiny line like this. Do not use a bogus, do not use these bold lines. Use it as a tiny line. And then what are those levels now? So this very 0.38 Fibonacci retracement tool, this is a premium zone. I forgot, like, it is not 33%, it is a 38%. This is a premium zone, so we don't need it. These are where early buyers or early sellers are being induced in. Where early sellers, if you try to go in at the very particular price of the market, there's a larger tendency they will take you out. So this 0.38% will be taken out, and then this 0.3%, I have already removed it. So if yours is activated, remove it. So this 0.61%, this is the zone we want to keep. This is the number we want to keep. This 0.50, we also want to remove this number, because, or I will keep it for now and then show you why this very particular zone will make you to be risking massive. Then this very particular one as well, this very particular 0.78, this is the premium zone. This is the premium zone. So I will leave this very particular one. And then the one that shows us as only one, this is the beginning of Fibonacci retracement tool. This is the beginning of Fibonacci retracement tool. So you need to keep it. The one in the Fibonacci retracement tool normally starts from one and ends in what? And ends in zero. So this one that shows as 0.78%. This is the last level. This is like the last level before the one. So it's a discount zone. So we really have to keep it. And then let's remove more. Let's remove. So this one that starts with 2.61, we don't need it. 3.61, we don't need it. 4, we don't need it. We don't need it. We don't need this one. 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 We still doesn't need a 3. We still doesn't need the 3.2, 3.4, whatever. We don't need all these ones. We need to remove all these levels. So the levels that you need to have on your Fibonacci retracement tool is the 0.61%, 1, and 0.50 and 0.78%. After you are done doing that, just click on OK, and then it will arrive at this way. Maybe yours might be showing something like so many colors. You could still customize by going back to the style, and then come back. You could see something that look like this. You could use one line, use one color like black. I use entirely black. That's why you see my own is very simple. and then I use background color as white. The background color, you could turn it as white. At the end of the whole day, click on OK. You don't really need all these things. Click on OK, and then it will arrive at this very particular way. So you get now. This is how you could set your Fibonacci retracement to. If you still don't understand this very particular side, play price backward so that you could understand how to set it properly. Now let's now concentrate more on how to plot this Fibonacci retracement to both on an uptrend market and in a downtrend market, and I will tell you why you need to focus more on the 61% or 78%. Now here is how it works now. This is how it works. Whenever the market is pushing to the upside this way, whenever the market is pushing to the upside this way and the market print a new high, the market must want to do something like this to induce early sellers or to induce early buyers. People that will start going in for a buy here are people that are buying very early, are people that are buying at the premium zone. So price might buy a little and then take them out, start searching for the what, for the 50% or the 61%. Now this is one thing that will happen to you. Let's say you plot a Fibonacci retracement to from the low and drag it up to the very particular high, and then you are looking for your 50%. You say you want to be trading from 50%. Now whenever price tests the 50%, there's a larger tendency that price normally buy. Yes, there's a larger tendency that price normally buys at 50%, but there is also larger tendency that you'll be risking massive. Now let me see. This is 50%. This line is for the 50%. This line is for the 61%. This line is for the 78%. This one is for the 1%. Now if price fails to respect the 50%, if price fails to respect the 50%, it will want to dip in to touch the 61%. If price fails to respect the 61%, it will always want to dip in to touch the 78%. If price eventually breaks the 78%, it has given you a shift in market structure, which is change of character. It has given you what? A shift in market structure, which is change of character. So so that is the reason why this very discount zone is a very strong zone. So whenever price takes the 50% and you are looking at to go in for a buy, this is how you're going to go in. If you put your entry at that 50%, your stop loss must be below the Fibonacci retracement 2. Must be below the Fibonacci retracement 2, and your take profit will be just a little bit above the Fibonacci retracement 2. Now when you look at this very particular thing, you will see that you are risking the same as you are targeting, which does not mean anything, which doesn't make sense. You are risking the same thing that you are what, that you are targeting. This is not business, this is gambling. So you get, so because the 50% will make you to reach this massive, that is why you shouldn't be looking at to go in for a buy there. Most of you will argue with me that why won't I keep the stop loss inside here? Now there are two things here. You can actually keep your stop loss like this. You can actually keep your stop loss just inside that Fibonacci retracement tool. But I want to ask you something, that this thing will turn with your emotion. Are you willing, or will you be able to bear the loss when the market takes you out on this particular 50%? It might want to buy a little when you get here, it might want to even buy massive, or sometimes might buy a little and then take you out and tap into the 61%, and then you see price start buying. So would you want to be seeing something that look like this, or can you afford to set spending on that in this 50%, 61%, or 78? If you can't afford to do that, if you can't afford to bear the first loss of that 50%, please do not do such thing, because there's a tendency that price might do something that look like this. So even if you tell me that I will be looking at the 61% and I will have my stop loss just still or below that 61%, now the same thing that happened to you at this 50% is likely to happen to you at this very particular what, 78%, where you will see price when we are this very particular 61%, where you will see price dipping in just to tap into that 78. You see price hitting your stop loss, the next thing price will move to the other side. The reason why it happen that way is that every part of the very particular level is what, is the 61%, and is the discount zone. So price really wanted to test the 78, and unfortunately your stop loss is just at the what, at that 78. So you need to keep your stop loss below this zone. So when you look at the very particular thing now, it looks like what you are risking and what you are targeting are a little bit similar, a little bit similar, but I would just advise you to keep it simple and look at the 78%. The 78% zone will make you to risk little, will make you to what, will make you to risk little. You won't be risking all this massive. You will risk little and you will target big. And let me tell you one thing about one of the most favorite thing about this tool is that it tend to respect most zones. It will come to 50% and buy a little or buy even massive. Sometimes you feel that you have missed out on that 78% entirely. Is a lie. Price will definitely want to come back to that 78%. It all depends whether you are going to have patience. Sometimes when price tap into the 61%, do you see price buying for a long period of time? Are you getting me? Now you that was using 78% will be like you have missed out on this. It's a lie. You have not missed out. Price will still come back to that 78% and trigger your order. It's just a matter of patience. It's just a matter of time. Are you getting me now? So this is how you are to work. This is how you should go in for a buy. You should be looking at the 78% zone, because the 78% zone will make you to risk little. Or if you are a stubborn type that says I will be looking at the 61% and still be looking at the 78%, that means if you keep your stop loss just above, just at the top of that 78%, you should equally or set another pending order at that what at that 78%, because just be prepared, because this market is likely to take you out. Tap into the 78 and what and buy massively. So this kind of thing normally what it normally happens. It normally happens. The same way it is applicable for what? For sell. Are you getting me now? So whenever the market is in an uptrend or downtrend, this is how you could plot your Fibonacci retracement to. What I just showed you now is how you could escape all those that you entered by and market hit you out, then later again market start going in your direction. This is how to work. This I have showed you how to work, how to filter out all those particular stuff. Now let's now concentrate more on how to plot Fibonacci retracement to both on an uptrend market and on downtrend market. This part will look very confusing and straightforward, but believe me, after watching this video, you will come to understand how to do that in a very simple manner. So this is gold, or we are going to make use of this very particular gold. We're going to make this very particular. Let's make use of this gold. So this is gold USDT. This is gold USDT on 1 hour time frame. So I'm going to be showing you how I was able to start looking at this zone and what even made me to be start looking at this zone. Now I want to tell you, whenever you are making use of your Fibonacci retracement to always focus more on something that broke a structure. Always focus more on what? On something that break a structure. If it fails to break a structure, you don't need to look, you don't need to what? Look at it. So I'm going to filter out it. So what is really happening here on gold? Price has been consolidating for a while. Price has been consolidating. You see this, everything that is happening here is in a ranging market. This is what? On a ranging market. So price has been consolidating here. A time came, price started pushing to the upside, and price was able to break all the very particular zone. You see, the moment you saw this kind of thing, this is what you really want to see. This is what you really want to see. You want to see a BOS to the upside or a BOS to the downside. So you see, this is a BOS. So you see now. So what are you to do now? You need to wait for price to start correcting back. Before you start plotting your feet, you need to wait for price to start correcting back. That's for price to start retracing. For price to start what? Retracing. So when it's retracing, it will give you an insight, or it will tell you the height of that very particular what retracement, because you need the height of it to be able to plot a very good Fibonacci. So now we have to read the market structure to see where this very particular what to see where this very particular move it was initiated. So when we start looking at from here, because we know that price sold from here, and from here that price start pushing to the upside, we will see that this is a what? This is a tiny BOS or internal structure BOS here, or whatever maybe change of character that was here, and price did what? Price retreat. After this BOS, price bought massively. Let me stay on 30 minutes so you could see it properly. After the very particular BOS is spotted here, after this BOS, price retrace. Now, even if you want to start plotting your fee from here, when price is retracing this way, all you have to do, as long as you are targeting to buy, you have to plot from the low. You have to do what? Plot from the low and drag it to the upside, and drag it to the what? And drag it to the height of that very retracement. So you see the height of it, you see the height of it. So this time around, you see price tap into the 61% and price bought. Price tap into the 61%, it even disrespected the 50%. Let's say you had the type that was using the 50% and you have your stop loss just at this very particular 61%. Price just took you out, tap into the 61% and bought massively, and could not get to the 78% for this time. Now, I know most of you that was using the 78% will start feeling very bad. It normally happens. That does not mean that price will not later come back to this 78% in the future. It will definitely what come back. I can see it could really what's coming back. But let's follow the price of the market. So you could see the 61% here played out very nicely. So we remove it. So this time around, what can we see here? After all dis thing, market consolidate and market push to the upside and broke all the very particular structure, giving you what? Giving you a POS. Now this is now like a retracement. The same way what you did here is what you are going to do here. Plot your fib again, because we will see after this buy, market retrace from near market push aggressively and broke a structure. So we will plot from this low and drag it to a particular what? High. So you could see now that the market tap into the 61% again. The market tap into the 61% and bought massively. Twice by the 61%, e bought what? E bought massively. So we remove this thing again. You see, e played out, right? And now this time around, we will now mark another BOS. So we could see now after we mark this BOS, and then if we are to plot our fib, the market has been buying, the market has not retraced. Maybe when this thing gave this last retracement and it started buying this way, and you saw the market returning back like this, you plotted your fib from this low and drag it up to a particular high. All of a sudden, the market retraced a little, bounced at that very at that very premium zone, and keep pushing to the upside. There's no issue. All you have to do is keep pushing it again, keep it like this. So where is now your 61%? Look at your 61%, look at your 78 word, look at your 78%. So you get now, so there's a lot of tendency that price could just return back to this very particular 61% and bought as usual, just like the way it did at the very particular zone. Or price might want to dip into the 78% and what? And bought. So this thing is what? It could happen that way. So can you see whenever price tests a 61%, it normally what? It normally reacts. So currently price is at my 23% discount. Price is currently at my premium level. You could see that a lot of buyers, a lot of early buyers are already going in, and you could see they have capitalized on this little buy, and now sellers are looking like to take them what? Out. So this is how you can plot your Fibonacci retracement tool on an uptrend market. So you could see when you plot it this way, let me go back to 1 hour time frame. Let me go back to 1 hour time frame and plot it proper. So you just need to understand the origin of that very particular move. You just need to what? Understand the origin of that move so that you can plot a very good Fibonacci retracement to keep it up this way and then mark out. For me, I normally go in for the safety for the 78% Fibonacci retracement tool. The reason why I normally go in for the 78% Fibonacci retracement tool is that I know that whenever price break the 78% zone, that price normally reverse. That price has what? Price will switch trend, it will change character. So why I value it again is that it equally enables me to risk little. It equally enables me to what? To risk little. Now let's check out on how we could plot Fibonacci retracement tool on a downtrend market. So we're gonna make use of BTC USDT and then follow the trend to see how we can be able to do that. So let's use this very particular 30 minutes time frame. So we see what really happened there. BTC USDT had been consolidating for a while. A time came, there was a massive push to the downside, which gave us what? We gave us this BOS. You see, the very particular BOS gave us this BOS. After a long run, a buyer stepped in to push price up. What you have to do is plot your fib from the high that originated that BOS down to this one, down to this level. So you see, when price bought a little at the premium zone, they took it down. It was still at the premium zone. The sellers were took it down. Now extend it down to that zone, and then you could see now price now pulled all the way back to the 61%. Price pulled all the way back to the 61%, and you saw boom. You saw how price sold. You saw how price sold massively to the downside. Can you see? You saw how price sold massively to the downside. So you see, so the next thing now you have to do now again is where is the next BOS? After this price sold like this, price gave us another BOS here. Price gave us another BOS like this. You see another BOS. So we plot your fib again from this high down to this low. See the low, see the low, see the low here, down to this low. So we could see that price has tested our 61% now. Price has done what? Price has tested our 61%. So most of you that normally make use of your 61% is already selling. Is already what? Is already selling. And you can see you were on a little profit. No one knows whether it's going to sell or for a long time or whether it's going to respect it again for this time. But this is another one. This is a 78% discount zone. So no one knows whether price might want to do kind of this, maybe respect it a little, sell a little, and tap into the 78 before dropping to the downside. Are you getting me now? But just what you need to know is that when the price is in an uptrend market, you plot from the low to the up. When price is in a downtrend market, you plot from the low. When price is in an uptrend market, you plot from the low, you plot like this. you plot from the low to the up. That means one will be the starting point, the one will be below, and the zero reward will be above. You plot from the low to the high. The way price is in a downtrend market, you plot from the high down to the low. That means one will be what? One will be above, and zero will be what? And zero will be below. So this is how you will literally plot your Fibonacci retracement to both in an uptrend market and in a downtrend market. You cannot plot your Fibonacci retracement to in a consolidation market. It is only on a trending market. It is only on what? On a trending market. Now let me show you more. Let me show you more maybe before we end this video. Now let's look at something like a NZDZ card. I think, okay, let's look at US oil. So I will still show you why I normally make use of this very particular Fibonacci retracement. So you see the very particular thing, I entered the very particular buy just with Fibonacci retracement too. And I believe if you watch the other video I will drop soon about how to go in for a buy or for a sell using Fibonacci retracement too, you will come to understand how I was able to go in for the very particular word buy. Fibonacci retracement is always my number one word, my number one tool. So this market has been pushing to the upside. The market broke a structure this way. The market retraced. During that time, what I did was that I plotted my feed this way. The market could not even get anywhere closer to my 61. It was still at the premium zone. Later on, they still took it up. All I did, I extended it up to that the highest high. So you see, when I extended to the highest high, let me decide to hide all these things. So see whether I can plot it. Okay, no way, no way. So let me remove this particular one. So I believe you could see this thing. So when I plotted it to that highest high, price tested the 50%, it bought a little, then price came back to the 61%. You see how price was consolidating, 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 and still later bought at that 61%. Then later price has to pull all the way back to my what? To my 78% before it went in on a buy. You could see it is buying massively and I'm on a good profit. Now let's check out other ones as well. You could see other ones like Euro USD. This one I missed out on the very particular one. This one price came so close, and I know that price is just respecting the 61%. So we see price has been buying massively, price has been pushing to the upside. He gave me a change of character. When he gave me this, he had a little retracement. All I did was that I plotted my feet from the low and sorry, from this very particular low, from this low, let me remove it, from this very particular low, from this low up to the very particular what high. So price tested my 50% and could not get to my 78%. He bought massively. I kept extending it, and this is the highest high of it. And then I have realized that here is my 78%, and I'm gradually waiting for price to return back so I can go in for a what? I can go in for a buy, or I can go in for a buy. So while I was waiting for, I saw that price is already retracing, and then I saw something like a market structure shift here. Then what I did now, I plotted my feet from the high. Remember how we do when you switch to a downtrend market, from the high down to the low, and this is my 78%. But unfortunately for me, when price returned back, tap into my 61%, he sold, and I'm now still waiting for the 78%. That does not mean that the price will not really come back to this 78% in the future. It's just like a matter of what? Being patient. Just what? Being patient. So this is how you could plot your Fibonacci retracement to both on an uptrend market and a downtrend market. It is no difficult. I've taught you how to customize your tool, how to set those levels, and how to pay attention to those levels. The advantage and disadvantage of paying attention to multiple levels of Fibonacci retracement tool, and why you should make use of the 78% zone, because it will make you to reach something that look like this, and you'll be targeting something that look like what? That look like this. So this is where I will bring an end to the particular video. If you still don't understand how to do this, watch the video again, watch the video again, and then watch the next video to see how you could go in for a buy or sell using Fibonacci retracement tool, because we'll be using SNES to play price back. We'll be using SNES to play price backward, as in to backtrack, to backtest the very particular stuff, to show you how the very particular thing works. I'll be using this very particular tool. Wait for it to load. I will show you what I'm about to do on the next video. The next video will be very, very interesting, because I will teach you the easiest way to spot for a buy or a sell using Fibonacci retracement tool. We'll be playing price backward. You see, this is it here. This is it now. We'll be playing price backward, and we'll see how price normally reacts when you get to the 61% or when you get to the what? The 50%. So this is it now. So this is it. So okay. So you see, so this is gonna be the next topic I'll be teaching you. The easiest way to sell or buy using Fibonacci retracement. So search for the video in my bio. Believe me, you will after watching this video, you will struggle no more on how to go in for a sell or how to go in for a buy using Fibonacci retracement too. So for now, we call it an end or a particular video. If you have any question, drop it on the comment section. I'll be there to reply you, and I will make sure I reply you with a question, with an answer that will enable you to understand what you asked for. Thank you.